We got some big news for Adobe stock investors as the company reported on their latest quarterly results, and it adds to the great success the company's been reporting over recent years. And of course, every incremental quarter of positive results for Adobe means a lot more to investors right now as the company's under threat from the rising effectiveness of artificial intelligence and all the increase in competition that's resulting in. So I'm going to share with you the details of these good results for Adobe. So one of the positive developments that came out of Adobe's recently announced results is that the company is buying back more of its stock. In the second quarter, they entered into a share repurchase agreement totaling $3.5 billion, and they have $11 billion remaining on that $25 billion authorization that was granted by the board of directors in March of 2024. So that means they've got $11 billion left. And that means that they've also purchased $14 billion worth of Adobe stock since March of 2024. And that's usually an indication that the management team believes that the shares are undervalued. It also could mean that they don't have opportunities to invest that money in areas, but hasn't been the case, right? Adobe's been investing significantly in developing new products, incorporating artificial intelligence in its products. So they are investing in the growth of the business, but they're also buying back shares. And I would agree that the company's management team thinks the shares are undervalued because I felt that the shares are undervalued. Now, when I look at Adobe's forward price to earnings ratio at just 17.4, it's near the lowest it's traded for going all the way back to January of 2023. So the valuations do look cheap, and I can understand why management wants to buy back shares. I got this chart from fiscal.ai. There's a link in the description. If you want access to this service, you get a discount by using my link. So Adobe's management team went on to say that for the next quarter, they're forecasting revenue of $5.9 billion, which would be an increase from the previous quarter where revenue increased by 10% year over year. Furthermore, as a result of the strong performance for the first half of the year, the company is raising their targets for 2025 in both revenue, in digital media segment revenue, and earnings per share. So both revenue and earnings per share, the company is saying, we think it's going to be better than we thought coming into 2025. So that's great news for investors, right? The company came into the year telling investors they expected to deliver a certain number on the top and bottom line.
Click the link below to watch the full video.